Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is December 24th, 2022. It is Christmas Eve day. Hope you're having a great day. Hope you're going to have a great holiday, and thank you so much for coming and visiting my weekly review podcast. And in this podcast, what we are going to do is, first of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at the current positions that I traded last week, both on the daily time frame, the weekly time frame, the monthly time frame. We're going to talk about when I entered the trade, why I entered the trade, and most importantly, how I am going to manage the trade going forward. Last week, pretty big down week. It's been pretty tough the last week and a half, obviously. But when we have these sell-offs, they do provide good buying opportunities if you get to the right levels. So, like I said, first of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to go through all the trades that I executed and managed last week, show you why I did them. After that, we are going to talk a little bit about trader psychology. Most important skill in trading is the ability to create a plan, follow your plan, and not let your emotions get amplified and get you off track. After that, we're going to do a poem for my good friend Frank, who is a trading poet. Always has a good poem pertinent to what's going on, and always some good wisdom in those poems as well. And then after that, I have gone down through my master watch list, and I have some potential trades that I'm looking at next week, both on the daily time frames and the weekly time frames, and I'll point those out, give you kind of an idea of how I look at trades, how I look at risk to reward ratios, how I position size correctly, how I have emergency stops, end of day stops, profit targets, significant overhead resistance levels. So that's what we're going to do. So hang tight. First of all, we're going to run the U.S. legal disclaimer. Apologize, and I'll be back in about 40 seconds. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. Thanks for holding through that with me. All right. Well, let's get to current trades. MasterCard. I did buy MasterCard back here on the 20th of December. Why did I buy this? Well, you see this nice confluence here of the 300 moving average and the 250 moving average, and they've nested right here together. Now, I bought this when it had the second bounce off of the 250 and the 300, and bought this here at 342.70. Of course, I always place my position size by taking my maximum allowed loss on the trade, which is, good rule of thumb, is 1%. So if you had $100,000, $1,000 would be 1% divided by the value of the 2 ATR. That first of all shows you how many shares to buy, and then it also shows you where your emergency stop is. So if you took the trade and it went down here, you would lose, well, that hypothetical $1,000. Now, that only happens about 5% of the time. The majority of the time, the rest of the time, your stop is going to just be your end of day stop. And I bought this because of a bounce at the 250 and the 300. Now, if it closes below, because closing price is always the most important price, in my opinion, because the large financial institutions come in at the end of the day, they make their decisions. I think they have the best information, best technology, they're dealing with the most money, very smart people, and so I do believe that the end of the day price is the most valid price. So bought here 342.70 with the bounce at the 250, went up the next day. I did hit one profit target. I always take a 10% of my position off if it moves the value of 0.45 ATR, right now the value is 345, but if it moves the value of 0.45 ATR from the previous day's close, that's when I take 10% off. I like to play offense and defense in trading. Defense is your emergency stops, defense is your end of day stops, defenses are your trailing stop levels, but offense is taking partial profits into strength. When the market gives you something, I always want to take something. So next day went up, had a profit target. Next day came down. During the day, we went well below the 250 and the 300. The 250 and the 300, but it did manage to close back above. So the trade is still intact. Friday, yesterday, we gapped way below, rallied back up above. So you see the end of day price is what I key it off of. So this particular trade, not up a lot, but up, thankfully, up about 0.24%, which is way better because the last couple days it was significantly down, and intraday the losses, the losses were much larger. But I was really happy that MasterCard was able to close above my entry price. I have this line here. This is 1.5 ATR trailing stop level. If we ever get to that level, now I go into trailing stop mode, which just simply means if I get a close below a previous bar's low, then I will get out of half the position. But again, taking the offensive part of the trading, right here we're at 343.60. I would add 354, which is the 0.45 ATRs to that. That tells me on Tuesday, because market is closed on Monday, if it does move $3.54 from today's close, I will take off half. And I usually put in 3 limit profit orders. Take the price, add the 0.45 to it. That's my first profit target. Take the first profit target, add the 0.45 to it again. That's my second profit target. And one more time for the third profit target. So I always have 3 limit orders in 0.45 ATRs, 3 times above what the closing price was. So anyway, as long as it stays above this 250 and this 300, I'm still bullish on the trade and glad this is up 0.24%. That's the only not day trade, but swing trade on the daily time frame. Now let's go to weeklies. Okay, so I did buy. Now weeklies close on Friday, so I make my buying and selling decisions closed based upon that on Friday. I bought IWM back here on 10/14/22 with an intra-week rejection of the 300 week moving average. I bought it at 167.19. And if it had, I placed my emergency stop below. If it had closed below the 300, I would have simply gotten out. My trailing stop levels here at 182.20. 2 weeks later, it got to trailing stop mode, but it never had a close below the previous bar's low until 2 weeks ago, when you see it got to trailing stop level, then had a close below the previous bar's low. Got out of half the position at 178.70 and locked in, what is that? Right about 6.46%. And glad that at least right now that I took it off, because we are lower certainly than that. We're at 174.39. So as if it closes in the future, if it closes below this 300 week moving average, I will just go ahead and get out of the trade. But currently this particular trade, from entry to current price, up 4.13%. Microsoft, another good example of trailing stop at work. I did buy Microsoft back here with a bounce of the 200 at 221.34. Placed my emergency stop. If I had a close below the 200, I would get out of the trade. Placed my trailing stop level here. Next week, it got right to trailing stop level. So I've been in trailing stop level for months, but it kept going up. Of course, I did take partial profits as the market went up, like I discussed with previously with the 0.45, taking 10% off, taking 10% off. I mean, on this bar, I took 20% off. I hit 2 profit targets. Hit a profit target here, took another 10% off, took another profit target here on the big move up. And so I think this illustrates why taking profits when the market gives them to you is a good idea. If you take profits and it keeps going up, well, you should be happy that you still have some, right? And if you take profits and it goes down, then you're glad that you took some off at higher levels. So I think it's about the only win-win situation in trading. But Friday, we did have a close below the previous bar's low. I did get out of half. I still have half. Close below the 200 for the other half is still my stop level. But this week did close below last week's low, got out of half on Friday for a gain of 7.82%. JO. Okay, well, again, looking for bounces at the 200, the 30 RSI, the 300s, a lot of deep dip buys here. And I did buy this back on 11/18 at 44.28 with a bounce at the 200. I position size, I placed my emergency stop, my end of day stop, or more precisely on this because it's a weekly trade, my end of week stop would be a close below the 200 week moving average. Has not happened. Orange line up here, 1.5 ATR trailing stop level. It is not there yet, so I'm not in trailing stop mode. This trade has worked out quite well from entry to current position right here, up 9.74%. Google. All right, this is a new entry that I took on Friday, and we have a higher low bounce at the 250. You can see the last time we tested the 250, it held and had a nice trade from that. Doesn't mean it's going to hold this time, but if you look in the past and it already has that particular support level, or the 250 week, you can see it clearly did respect that level. And is it going to respect it again here? I don't know. We shall find out. But to set up the trade, and this was a trade that I took on Friday. So let's just go through this. Let's just say for this example, you have a $50,000 trading account. Okay, 1% of 50,000 is $500, right? So I would take $500. I would divide it by the value of the 2 ATR. The value of the 2 ATR when I took it on Friday was 1474 divided by 1474. 33.9 shares. I can't buy a fraction of a share, so I just round that up to $34. So I would buy, or 34 shares. I would buy 34 shares here at $88.99, and then I would place my emergency stop 2 ATRs below. So if 34 shares moves 1474, that would be the $500 that you would lose, right? And it looks like a huge big stop here, but you've positioned size correctly. But my end of week stop is simply going to be a close below the 250. If it got to the emergency stop, I sell it whenever, because then I've hit my maximum allowed loss. But other than that, if it goes below the 250 during next week, but then closes back above, I keep it. But if it were to close below the 250, then I would just go ahead and get out. It's all about risk to reward ratio, position sizing correctly. And by the way, I do teach private one-on-one lessons in the evening time via Skype, and I do have a lot of rules here, and I'm limited on time to, go through all the exact details. But if you would like to study with me, if you would like to learn all the different 5 trading approaches that I use, I do offer that, and I offer that in a one-on-one setting via Skype in the evening time. I think it's the best way to learn for sure, is to learn one-on-one with your coach or your mentor. And I have a great program, and I have taught people from all over the world and really turned out some great traders. So if you're interested, my email is in the link of this YouTube video. Just reach out to me. The cost of the course is $1,750. It's substantial, but it is well worth it. It's an investment in your trading and really learning how to trade, and I'd be very happy to talk to you about it. And I'll talk a little bit more about it at the end, but my email is in the link in the description, and reach out to me, and we can talk about it. So on Alphabet, back to Alphabet, higher low, rejection of the 250. You can see this low is higher than this low. Position size, emergency stop, end of day stop is close below the 250. Orange line up here is trailing stop level. If I get there, then I will go into trailing stop mode. So that's a new trade. Okay, I did have some other trades that I closed out on weekly trades as well. I did buy the VIX last week when we went under 30, over 30 RSI. I bought it here at 1479. Position size, my end of day stop. Well, if I take an under 30, over 30, then my end of day stop or end of week stop in this particular case is just a close below the 30 RSI. And you can see, look where it closed, 29.99. So Where I come from, that is under 30 RSI, so I had to just bite the bullet and get out of the trade. Now, of course, I had my emergency stop way down here, but like I said, 95% of the trades that if you take losses on are going to be trades that your end of day or end of week stop signal and not the emergency stop. I haven't hit an emergency stop for a long time, but I certainly over the years have hit them, and you need to have them in there. So this was a losing trade. I did take an under 30 over 30. That was the entry signal, and end of week signal to get out on this is a close below 30, and it closed at 29.99. So I did incur a 4.6% loss on that particular trade. So I am now out of VIX flat. TLT. Great trade on TLT. Again, this is weekly. I took this back on 11/11/2022. Same entry signal as VIX, by the way, that I just showed you. Under 30, over 30 was the signal. We also had a V1 entry signal. V1s are a great add-on to any other signals that you may have. And I do have a free video in my YouTube channel under the lessons playlist on V1 and V2s, and it's totally free, and I think I do a pretty good job in that video of explaining how I use V1s or V2s. Essentially, this is a V1. We have bar 1 and we have bar 2. Bar 2 goes below bar 1's low and then closes above bar 1's close. We also rejected the negative third ATR channel. Now, I wouldn't take a trade just based upon the V1 in this particular context. I wouldn't take a trade just based upon a rejection of the negative third ATR channel, but adding those on to the core entry signal, which was the under 30 over 30, just sweetens the deal and improves the likelihood of profitability on the trade. So under 30 over 30 was the main signal with an under the negative third Keltner channel over and a V1 supporting signals as well. So I did get long here 97.70. Just went straight up. Of course, as it moves up, if it moves 0.45 ATRs from the previous bar's close, I start to take profits. Took some profits on this week, took profits this week, hit 2 profits targets this week, right? So I'm taking profits all the way up into strength. A couple weeks ago, we went above the 50 RSI and closed back below. That was my signal to get out of half. So I got out of half at 106.30 for approximately a 8.17% gain. And again, in my classes, I teach you all of these rules. I know there's a lot of rules. I'm not expecting you to understand all of these rules here, but if you want to learn them step by step and really internalize them, that's why I really suggest that you take the course with me. So, but I did take 2 weeks ago, I took off half because it rejected the 50 RSI at 106.30. Now, this week we had a close below previous bar's low, and so I did get out of the second half of the trade at 102.30 for a gain of 4.18%. And if I take an under 30 over 30, or if I take certain V1s or V2s, there's 3 potentials that could happen. I could have a rejection of the 50 RSI, I could have a rejection of the 50 SMA, or I could have a close below previous bar's low after reaching trailing stop. And in this particular case, if 2 of 3 of those happen, then I'm out of the trade. And they did. Here we rejected the 50 RSI, took off half, and then last week with a close below the previous bar's low, after reaching trailing stop level, I am out of the second half. So I am completely out of bonds now and locked in 4.18% on this last trade. And then lastly, the monthly trade. Like I said, I day trade all day long. I take daily swing trades, I take weekly swing trades, I take monthly swing trades. In my experience, it's a good idea to use different strategies along with different time frames. It kind of rounds things out, gives you a smoother equity curve. So I did take a trade on the monthly trade on Intel, and it was a really nice setup. I mean, we had a close under, close over the 200 monthly moving average. We had a close under, close back over the negative third Keltner channel. We had one of those V1s that I was just describing, and we had an under 30 over 30. I had a lot of hope for this particular trade, but no matter how many good signals you get, it still doesn't mean it's going to have to go in your favor. So I did buy at the end of October at 28.21. The next month, it went up, and I did at least take some profits. See, that's the advantage of using those intrabar profits, the partial profits, because it did move up. I did hit one profit target. I took 10% off. I mean, obviously, it'd be better if I took it all off there, right? But I still have to follow my plan. We are now below the 200-week moving average. You can see I placed my 2 ATR stop down here for the worst case scenario. But my end of bar stop on this is just simply a close below the 200. So am I the 200 month moving average? Am I still in the trade? I am. It is below the 200, but I have to wait until the end of the month to make my decision. But if it was the end of the month right now when it closed below here, I would just go ahead and get out of the trade. So that's the trades. Not too bad. Did take a bunch of trades off last week as well. And so really the only new trade that I took last week open trades is the MasterCard trade with the bounce off the 250 and the 300, still in it, still slightly profitable. And then on the weekly, Friday, yesterday, I did take Alphabet with a higher low rejection of the 250 week moving average. All right, let's head over and do a little trader psychology. This is from Stephen Goldstein at AlphaMind 101 over on Twitter. Great channel. Stephen has a podcast where he interviews traders from all over the world, all different levels. I was lucky enough to be interviewed on that particular podcast twice. So please follow Stephen at AlphaMind 101. He always posts good material. Let's take a look and see what he has to say today. I've said it before, and I'm going to say it again, because it cannot be overemphasized. The most important change in my trading career occurred when I learned to divorce my ego from the trade. This is by Marty Schwartz in the book Pitbull. So what does that mean? Have you ever gotten into a trade where you think something's too low and it just keeps going too low and you're like, dang it, I'm right, this is too low, it can't go any lower? Well, that's your ego speaking. And what Marty is saying here is that the most important change in his trading career occurred when I learned to divorce my ego from the trade. If you can just get your ego out of the way and just take your signals and do what you're supposed to do based upon your plan, that's when you're going to be a better trader. I promise you, everyone, that is the way. I've been trading for 28 years, and whenever I break my rules or my ego gets involved, it usually doesn't turn out well. If I usually just take my signals, it can be frustrating. You get out and it goes right back up, and then you get in and it goes right back down. I get it, right? That's just part of trading. But I just want to sincerely tell you that, follow your rules. It's going to make trading a better, funner, more profitable situation. And just let the chart and the price action tell you whether to get in or get out based upon your levels. There was the VIX trade that I took the loss on that I just showed you at 29.99. Well, I could have rationalized myself. Ooh, a lot of scary stuff going on in the market, and it only closed 1 penny below or 1 point below 30. So maybe I'll just keep it. That's ego speaking. That's you wanting the trade to work out. What about if VIX is down huge on Tuesday? Well, then I have all the shame and I have all the guilt and remorse that I didn't follow my trade. And that's not fun to deal with. Shame and guilt, remorse is not fun to deal with. Even if you take a loss, based upon a valid signal and a valid reason to get out, it doesn't sting as much. But if you just take a trade based upon your gut or you think it's too low, that's when, one, you're going to lose probably a lot of money, and then you also have to deal with all those feelings as well. So one more time, I've said it before and I'm going to say it again because it cannot be overemphasized. The most important change in my trading career occurred when I learned to divorce my ego from the trade. Divorce your ego from the trade. Let the price action dictate what you're going to do, and don't just gunsling it, right? You don't want to deal with the emotions of being wrong when there was really no reason to be in the trade. So thank you very much, Stephen. Appreciate that. You can follow Stephen again over at AlphaMind 101 over on Twitter. Okay, before we get to potential trades for next week, let's do a quick trading psychology poem from my good friend Frank. You can follow Frank at FrankOD over on Twitter. Will the Santa Claus rally visit or at least call? Not so far. Will the Santa Claus rally visit or at least call? Many are worried about how much the market will fall. Last year felt like a waltz in a ball at a ball. Compare to this, where many lost or made nothing at all. Isn't that nice? Will the Santa Claus rally visit or at least call? Many are worried about how much more the market will fall. Last year felt like a waltz at a ball. Yes, it did. Compared to this, where many lost or made nothing at all. And that's this year. And, each year has its personality. And of course, 2022, not such a great personality. But who knows? Maybe 23. But, you know, all we can do is follow our signals. All we can do is position size correctly, place our emergency stop, know where our end of day stops are. And really, that's all you can do. You do everything you can do in your power, and then the market's going to do what it's going to do. And you're just going to have to have if then statements. If this happens, then I do that. If that happens, then I do this. So anyway, a lot of wisdom in this poem, and thank you very much, Frank. And please follow Frank over at FrankOD over on Twitter. All right, here we go. Let's take a look at some potential trades for next week. Now, most of what I'm going to show you, they're not ready to buy, right? They either have to go lower or higher for me to get interested. And I'm looking for some kind of momentum to the upside, some kind of momentum signal to the upside, or conversely, if it goes down, some kind of support level that it rejects and respects. So looking at Apple here, Apple's had a tough time of it, obviously, over the last couple weeks. And is there anything to buy here now? There's not. We're at 35.69. So there's nothing to buy on Apple. But what I'm looking for next week on Apple is simply an under 30 over 30, either a close under, close back over 30 RSI, or an intraday rejection of the 30 RSI. And that will be my signal on the trade. We have, I like to look at the higher time frame. So if I'm trading a weekly, I like to trade, if I'm trading a daily, I like to take a look at the weekly. For bigger context, if I'm trading weekly, I like to look at the monthly for some kind of multiple support levels. Apple on the weekly, here's the second ATR channel. About 88% of the time, prices do hold here at the second ATR channel. So you can see we're above it, but on the daily, if we do go under 30 over 30, we will also most likely reject the second ATR channel on the weekly, and that's what I'm looking for: multiple confluences and combinations of supports on multiple time frames. So just to sum it up on Apple, if we get some kind of close under, close over the 30 RSI, or some kind of intraday rejection of the 30 RSI, I would get long Apple, but it's not there yet. Amazon, same goes for Amazon. Amazon is at a 38.03, so it still would have to go down quite a bit for that to happen. Conversely, I could look for another trade on Amazon as we get into the value zone if I have a pullback and I have a higher low V1 or V2. But I have a couple other potential trades that illustrate that a little bit better than Amazon. So I guess I'll get into that when we get to those particular symbols. But simply on Amazon here, just to make it simple, and under 30 over 30 on Amazon, I would get long Amazon. Alibaba. Okay, so, at the beginning, I was talking about my course where I teach 5 different trading approaches. And in this particular market, I've been talking a lot about deep dip buy signals. Under 30, over 30s, rejection of the 250s, 300s, or the 250s. Alibaba's in a little different situation here. This is the 1 ATR channel. This is the negative 1 ATR channel. Anywhere in here, I consider the value zone, and it's better to buy below value and sell in value, or buy in value and sell above value. And this is really setting up nicely in that we have had a close over the 1 ATR channel and it's trended, and now it's come back into the value zone and it's consolidating. It's moving sideways, which is a good signal, a good sign that it's not just continuing to go down. There are enough buyers here to hold that consolidation. So what I'm looking for on Alibaba is a V2. I could potentially have a V2 on Tuesday because I have day one, day two. Day two goes below day one. Day three, if it closes above day one's bar one's close here, that would be a V2. Or alternatively, if we open down on Tuesday and reverse back up, we would have a V1 in the value zone. And it's one of my favorite trades. It's called a return to value V1 or V2 trade. And again, this is what I teach in my lessons. And it takes a while to really go through all of the rules and all of the nuances that happen here. So I'm just kind of big picture showing you here this return to value, nice sideways motion. V1, V2 would potentially get me long next week on Alibaba. And again, these are the things that I teach in my course. Cameco, this is a little different. This is a also looking for a V1 or a V2, but the reverse, which is called a higher low V1 or V2. And higher low V1s, V2s start out with the close under the -1 ATR channel. They rally into the value zone. But a lot of times when you come from a lower low and you have a nice move like this, well, the people that were lucky enough to buy down here, they are starting to think, if it keeps going up, they'll hold it. But if it gets weak, they'll probably sell and lock in some profits. And what that will do is it will move the price back down. But then if I could get a higher low V1 or V2, let's just say it moves down for a couple days, and then I have a higher low V1, V2 to the upside, those are the kind of trades that can turn into nice long legs up, and they come from a higher low situation, because if it happens, the low would be higher than this low. But again, this is what I teach in my course, and one of my very favorite trades of all time. I have some students that I was teaching last week, and they said, what's your favorite setup? And I said, really one of my very favorite setups is a higher low V1 or V2. And so Cameco is not there yet. Actually, let me show you off the subject a little bit. This was a trade that I took that I got out of a couple weeks ago, but see the same configuration? We closed below the -1 ATR channel. We rallied into the value zone. We had a pullback, and then we created a V1. Bar 1, bar 2. Bar 2 goes below bar 1's low and then close above bar 1's close. And, I was talking about easy moves up. Look at that. That was pretty easy peasy right there. So if you look here at GDX, we were below the value zone. We've come into the value zone. Look for a pullback and then a reversal with the V1 or V2. That is the same situation as CCJ. We were below the value zone. We came into the value zone, just looking for a pullback now and some kind of V1 or V2. So that's what I'm looking for on Cameco. It might just go straight up and I don't get the trade, but generally when you close below the -1 ATR channel, come into the value zone and have a pullback and then a reversal back up, that could be the start of a nice leg. And the V1s or V2s are what gets me into that particular trade. Diamonds. This is the Dow Jones Industrial ETF. We had a 5200 cross. This is called the Golden Cross here. I was looking last week for a rejection of the 200. It got really close, but it didn't get there, so I didn't get the trade. But next week, if we do go down, reject the 200 moving average, then that would be my entry signal for next week. Not sure if it's going to get there. We might also rally into the value zone. We're in the value zone now. Look for a pullback and then a higher low V1 or V2. So, generally in my trades, things either have to go lower or they have to go higher. Gold. This is really interesting. I talked last week about abandoned babies, and abandoned babies are when you have bars that have gaps to the left and to the right. See how there's this open space? I've highlighted the open space from here. There's a gapped up, and then boom, gap back down. That's generally very bearish. And this one didn't play out, but here, look at this. And now again, we have an abandoned baby again. I'm not sure if I've ever seen this, having two abandoned babies at the same time. Here's the low, gap to the left. Here's the low, gap to the right. That's very bearish, but I still need an entry signal. And so this is a short position. I'm looking for a short position on gold with a rejection of the 250 and the 300. So in other words, next week, if it goes up above that and then closes below, then I get short. And it's the same rules. I position size the same. It's just that your emergency stop is above you and your end of day stop would be a close above. So let's just say it closed over the 250 and the 300 and then closed back below. That would be my entry signal to be short. Or conversely, if it went above both and then rejected both in the same bar, that would be my short position as well. So I'm just looking for some kind of rejection next week of the 300 or the 250 to get short gold. Morgan Stanley. Well, I'm just being patient on Morgan Stanley. I'd like to buy some Morgan Stanley, but I need it to get down to the 200 moving average. That is my signal. It's not there yet, so if it doesn't get there, then I just go on and trade another market, or I trade something that does trigger my signal. See, that's the thing. You just have to be patient and not go, well, I think it's going up. Let it tell you that it's going up. Let it reject a significant level first. That's the most important part. So for Morgan Stanley next week, some kind of rejection of the 200 moving average, either a close under, close over, or rejection is what I would be looking for. PayPal. Okay, well, PayPal did have a signal on Thursday. We went under 30, over 30. I did not take the trade, but we're at 31.37 right now. Next week, if we continue down, I would look for another under 30, over 30. I really like when you get several under 30, over 30s at the same time, because it's testing that level, testing that level, testing that level. And if it keeps holding it, it generally will move back up. Not all the time, obviously, but we're at 31.37. If we're down on Tuesday, I could certainly see an under 30, over 30. And if it's a higher low under 30, over 30, then that's better than just a regular under 30, over 30. And again, this is what I teach in my one-on-one courses, okay? So for PayPal next week, an under 30, over 30 is what I'm looking for. Lastly, on the daily is UUP, which is the dollar. Of course, the dollar has come significantly down off the highs. See the abandoned baby up here with one bar? Gap to the left, gap to the right. That's very bearish. I was just discussing that on gold, and look at that. I think there was some room to make some money on that short trade. But we are getting some levels here, interesting levels. You can see 1, 2, 3, 4 days ago, we rejected the 250-day moving average. That would have been a legitimate trade. That certainly would have been a legitimate trade, and you would have been in the money somewhat. But what I'm looking for next week is just another retest of the 250-day moving average to get long on US dollar. And in addition to that, we have a lot of double bottom bullish divergences. Double bottoms bullish divergence mean that you have lows with deep red MACD bars. MACD bars are momentum indicators. We went low, 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 low with deep red. Then we rallied into some green. Now we've come lower, but there's no red left. There's only green. This is called the double bottom bullish divergence with a missing right shoulder. This is very bullish. It's showing that the momentum is starting to wane, run out. And if the momentum stops to wane and run out, then the implication is you're running out of sellers and therefore you will turn higher. But just because I have a double bottom and a bullish divergence, in this case, a missing right shoulder, it's still no reason to buy. I still need a valid level to key off, and that could be either an under 30, over 30, or a rejection of the 250. And again, this is another strategy that I teach in my one-on-one course. Okay, so those are the dailies. Let's head over to the weeklies. All right, remember on weeklies, I take the trade on the Friday based upon the Friday close. Back to Apple again. We are currently at a 39.21. I would need an under 30, over 30, or if we had a really bad week, a buy at the 200-week moving average, I think would be a steal on Apple, as long as the price action indicated that it rejected the 200. I really don't expect it would get down there. But next week, it's possible, if we do have a big down week, that an under 30, over 30 on the weekly. I would love to get long Apple with an under 30, over 30. AGQ, this is a short position. Short position. I'd like to see a rejection. If it heads back up, it still has to head back up. I'd like to see a rejection of the 200-week moving average. You can see I drew this pink line here, and all this is, I'm looking at the higher time frames and looking at the monthly. Do I see any resistance on the monthly? Yeah, I do. I see the 100-week moving average that it's going to have to contend with on the monthly, and that particular level of resistance lines up nicely with the daily resistance. So you have multiple levels of resistance on multiple time frames. So I don't know if AGQ is going to get up and reject the 200, but if I do, it seems like a pretty decent level to get in and get short. Of course, you have to have your emergency stop, you have to have your end of week stops, all that kind of stuff, and positions correctly. But I really would like to get short AGQ. It's already had a really big run here because of the multiple resistance levels on the weekly here at the 200 and the 100 monthly SMA, which is also a level of resistance. So looking for short on AGQ with the rejection of the 200. Amazon also had this on the daily. We're at 34.14 and under 30, over 30 is what I'm looking for on Amazon on the weekly. So next Friday, if it had gone under 30 and closed back over, then I would get long Amazon. Carnival. Okay, so I'm looking to get long Carnival here, but you remember when I was just talking about higher low V1s, V2s? Well, that's what I'm looking for. We have a close below the -1 ATR channel. We rally into the value zone. We pull back. So this is starting to set up and format for a decent V2. A V2 consists of 3 bars. Bar 1, bar 2 goes below bar 1's low. If bar 3, which is next week, if it closes above bar 1's close, then you see how it would give this little V formation. That's why it's called a V2, because you're using 2 bars. V1 only uses, 3 bars. V1 only uses 2 bars. So just to make this simple, if Carnival Cruise Line closes above 845 next week, then it will have created a V2, a higher low V2, because this low is higher than this low. And remember, I showed you that trade on GDX. Those work pretty well. They really, really do. So looking for a close above 845 next week to create a higher low V2. Also, if that's the case, it will have rejected the -1 ATR channel, which I always like. Kind of cherry on top, adds to the trade. So just to be simple, if Carnival Cruise Line closes above 845 next week, that would give me a higher low V2 and I'd get long. But only next week. It only counts for next week. Disney, we're at 37.16. I'm just simply looking for a rejection of the 30 RSI next week. NVIDIA, big down day. Well, I would love to buy NVIDIA at the 200-week moving average. I don't know if it's going to get there. It may take a week or two or never. But if it does, it would give me a higher low rejection of the 200 to be higher than this low. And you can see last time the close under the 200 and over the 200 worked out to be a pretty nice trade, didn't it? You know, really nice trade. Actually, if I would have bought this here, I would have been taking profits here. I would have been taking profits here. I would have been taking profits here. This bar here, I would have got to trailing stop level. And then Friday's close with a close under the low, I would have gotten out of half if I'd have taken this trade, but I didn't take this trade. But moving forward, if we come back down, test this 200-week moving average, that's where I would get long NVIDIA. Qs, okay. Well, a lot of times with trades, they either have to go higher or lower for me to get interested, and this is a good example of this. If we go lower and we reject the 250, I would get long. If we go higher and close above the 200 on a weekly basis, I would get long as well, because I want to have the support below me. If it rejects the 250, then that automatically means that I have support of the 250 below me. And you'd rather have support below you than resistance above. Here you have the 200 resistance above, but if it closed over the 200, then I would also get long, and then I have support below of the 200. Make sense? So just looking for a close over the 200 to get long, or a rejection of the 250 to get long as well to the downside. SSO, This one looks, very likely that we could close over the 200, and it would give me a higher low close above the 200 is really what I like. But it's the same thing. If we go lower, then I could key off of the 250. If I get a rejection of the 250, if we go higher, I could get long with a close back over the 200. Tesla. Wow, everybody. This stock, unbelievable. It didn't hold the 200, sliced right through it. Didn't hold the 250, sliced right through it. Is it going to hold the 300? I don't know. But if it does, I am going to get long here. This stock has just gotten beat up like unbelievable, man. Just really, really bad. But, when people are just dumping stocks like this, eventually there is going to be some kind of level that holds. And for me, this 300 level, which is what? 116.72. So yeah, it might have another 5 points to the downside, but if it were to reject that 250, the 300, I would certainly get long Tesla. Conversely, if it closes over the 250, I could also get long there on Tesla as well. And then VIX, I showed you this before that I took the loss on, right? The under 30, over 30, then it closed just below 30, 29.99. But if it closes back over the 30 RSI, that would also be a legitimate trade. So anyway, I hope you're hanging in there, everyone. I know the market's been rough. We certainly did not have any holiday rally, unfortunately. But my good trading friend Ava did mention to me that the majority of the Santa Claus rally, so to say, comes in the week after Christmas, before New Year's. And that's the week coming up. I'm not saying that is going to happen, but from a seasonality standpoint, that happens more often than not in this upcoming week. So we'll see. But, at the beginning, I talked about the private one-on-one lessons, and it's such a great course. And learning one-on-one with someone is really the best way. And like I mentioned, it does cost $1,750, but it is so worth it because you get 15 hours of me one-on-one. I teach you step by step exactly how to trade all 5 of the different trading strategies that I use. And all you have to do to start this, send me an email. The email is in the link of the YouTube video. If I get an email from you, I'll respond and say, hey, how's it going? Let's set up a Skype call. The Skype call is totally free. It's not a sales call, I promise you. I just want to learn more about you, your trading challenges, your goals. It's a great time for you to ask me any questions about the course in general. And then when we're done with the call, that's it. I will not contact you. I will not send you emails. It's up to you. But if one morning you wake up and you say, today's the day I really do want to learn how to do this, I promise you I will give 110% in my classes to you. And it's very fulfilling for me when I have a student that finishes the class and they feel very confident in their trading. All right. And so just send me an email. If you like today's podcast, I really would appreciate it if you could hit the thumbs up button. It does help build the channel. It helps keep the channel around, lets YouTube know there's some valuable content. So if you did find something valuable today, if you could just hit the thumbs up button, I would really appreciate that. If you like online courses, I have a great online course available at udemy.com. It's called the Deep Dip by Strategy. It's very affordable. It's only $12 or $15. There's a ton of content there. There are 26 videos. There's 9.5 hours of actual video. There's 15 study guides, and I teach you step by step how to trade the Deep Dip by Strategy. And I've shown you most of the trades that I've highlighted today were deep dip by strategy. So it's a great course. It's totally affordable. It's a great way to get trading. And I've had so many great reviews from all over the world on that course. And the link to that Udemy video is in the link. And then lastly, and most importantly, as always, please try to go out and do something nice for another human being today. Please try to go out and do something nice for an animal today, if at all possible. Humans and animals both like acts of kindness. You would like it if someone did it to you, and it would just make the world a whole lot better place. So I try to do that every day. And, I don't have a big platform here, but since I have a little bit of a platform, I like to at least share that. And, hopefully that will make the world a little bit better place for you and I if you could just do that. So I hope you have a good holiday, everyone. I really do. And next week is our last week of the trading year. And so thank you so much for coming. If you have questions or comments, please leave them in the comment section, and I'll do my best to get to them. But thanks for coming. Thanks for spending the time. Hope it's helpful. Have a great holiday. And God willing, we will see you next weekend, and we'll review the trades that happened for the last week of this year. So on the way out, I have to run the U.S. legal disclaimer. Thanks again so much, everyone. Take care. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. There is a potential for large rewards. There is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.